Welcome to Coaltrans Connect. Coaltrans Connect is a weekly webinar series sharing detailed analysis about the changing global coal market. As you can see from the slide, we have 4 upcoming webinars. So the next 3 after this one will be looking at China, India, and then Egypt. We are also planning to run 3 live conferences this autumn. So as you can see from this slide, the next 3 conferences are Coaltrans China on the 14th to the 16th of October, the World Coal Leaders Network on the 25th to the 27th of October, and Coaltrans Asia on the 22nd to the 24th of November. Each of these live conferences will also be running with a dedicated virtual conference. So if anyone is unable to attend for any reason, they will still be able to access the virtual conference. The virtual conference will be online and it will allow you to watch seminars, participate in Q&A, book digital meetings, and attend small group roundtables and more. To give you an introduction, my name is Julia Harty, and many of you will have met me over the last 2 years. My role at Coaltrans is as the conference producer. So I do the research, write the agenda, and work with our wonderful speakers. Our speaker for today is Rodrigo Echeverri. Most of you, I'm sure, will know him very well. Rodrigo is the head of research at Noble Group. Rodrigo has worked in commodities for over 15 years, holding roles in marketing and research in South America, Europe, and Asia. He's worked for the largest producers and traders in the industry, including Cerrejón, CMC, Adaro, and Noble. As head of research at the Noble Group, he currently covers over 12 different products for 5 trading desks. Rodrigo is based in Singapore, where he is a permanent resident along with his family. He co-lectures the course Commodities, Fundamentals and Modelling at the National University of Singapore. So over the last 3 to 4 months, obviously the coronavirus has completely turned the world upside down. Many of the commodity markets have been heavily impacted. And obviously over the last week, we've all seen the oil market has been impacted the most heavily. So while we wait for some of the others to arrive, we're just going to do a few polls. The first poll we're going to do is looking at the oil market, which, as I said, has been heavily impacted. So we'd like to hear from you. What do you think the average oil price will be for the remainder of 2020? Please cast your vote. The options are roughly $1, roughly $5, $20, $50, and $100. So that's what do you think the average oil price will be for the remainder of 2020? Roughly half of you have voted already, so I'll just wait for a few more of you before I show the results. Okay, 3/4 of you have voted now, so let's see what the results are. Okay, so very interesting to see that most people think that it will be roughly $20. Very interesting. Okay, the next poll that we're going to do is looking at how the coronavirus has impacted you and your business directly. So please tell us, what are the biggest challenges for your businesses during these unprecedented times? Is it transitioning to working remotely, disruption to the workforce, disruption to demand of coal, disruption to supply of coal, disruption to supply chain logistics, so coal transport, financial challenges, or other? Okay, roughly half of you have voted. I'll just wait for a few more votes to come in. Okay, so that's very interesting. So biggest challenges that you've been finding are disruption to the demand of coal and financial challenges. We're going to do one final poll before we start the webinar. So just so that Rodrigo and I have an idea of who is in the audience, we'd love for you to let us know which of the below best describes your job role. Are you a coal producer, a coal end user, a trader or broker, coal transport and logistics, analysis, research or consultant, legal, insurance or finance, or other? Okay, so interesting to see that most of you, well, a third of you have said you are in analysis, research, or a consultant. We also have lots of traders or brokers and coal producers, and then roughly 10% each end users, legal, insurance, or finance, other, and then 5% coal transport and logistics. So hello to those of you who have just joined us. And welcome to the Coaltrans Connect webinar. As you can see from this slide, the Coaltrans Connect webinar is a weekly series sharing detailed analysis about the changing global coal market. The next 3 sessions after this are looking at China, India, and Egypt. So you can use the web link www.coaltrans.com/insights for more information, and keep an eye out for emails about that as well. This week's session is looking at the macro overview of the global coal market during COVID-19. The session will be broken down into 4 parts. The first part will be looking at the impact on the economy. The second part will be looking at coal demand. The third part will be looking at production and supply of coal. And finally, we will be looking at a supply-demand balance forecast. At the end of those sections, we will be doing a Q&A. We'd love to actually be able to hear from you. So please do use the raise your hand button at the bottom of the page so that Rodrigo can actually chat to you, and we will be prioritizing those questions. If you feel a bit shyer and you'd rather type a question, then you can use the Q&A button to type your question. There will be a recording made available of this, and we will be emailing you within the next week with the link. Right, before we start part 1, we're just going to do one last poll just so that we can see how your views vary with Rodrigo's. So the first part is looking at the economy. So we would like to know from you, what type of economic impact do you think COVID-19 will have on the global economy? Will it be a correction? So a fall of at least 10% of key benchmark stock indices. This looks like a V shape, and it's similar, for example, to the 2016 coal crash. Do you think it will be a recession, a fall of at least 20% of key benchmark stock indices? So that would be more of a U shape, more similar to the 2008 global recession. Or do you think it will be a depression, a fall of at least 30% of key benchmark stock indices? So that would be more similar to the 1930s depression. Okay, roughly half of you, so we'll just wait for a few more. Okay. So, very interesting to see that over half of you think it will be a recession. Just over a third of you think it will be a depression, and under 10% think it will be a correction. So with that, I'm now going to pass over to Rodrigo so that he can begin part 1.
Hello, hi. Normally I would say nice to see you, but I cannot see you. So, you know, whatever replaces that these days, nice to be able to be with you again. So today we are going to do one of those classic noble market updates, I guess some of you are used to, that we do in most of the Coaltrans conferences. So we've split this session in, most broadly speaking, in 4 parts. So first of all, we are going to talk about the macro drivers. You know that that's very much my style. I try to put coal in the context of the economy to really try to find what are the big picture drivers for well, coal demand and ultimately supply and coal prices. Um, there is a comment saying we can't hear you. Can you hear me? I'm just going to try to check that.
Yes, we can all hear you. Sounds great.
Okay, sorry. Maybe somebody is having problems with the audio. So going back, so macro drivers is the first part. Then we talk about demand, which is just a consequence of macro. And then we'll do a bit of supply, which is, in my opinion, to a great extent, a function of demand and of course prices. And then we conclude, bring it all together and try to see what the outlook is like for the remainder of the year. So first of all, Noble, you guys, most of you, if you are on this webinar, you know who Noble is. We are a supply chain manager, very centered around flows in Asia, not only coal, we do thermal, metallurgical, coke, of talking about the black stuff, also a bit of liquids, not so much oil, mostly diesel distribution, very specialized business in that sector. And in terms of hard commodities, we also do the more, you would call it exotic, manganese, chrome, tungsten, tin, and other metals. So we do a specific origination in around Asia and also in Africa, Southeast Asia, Northeast Asia, and we distribute in this market. So quite a classic commodities trader with a physical presence. So let's do now talk about how the flow is put together. So in terms of coal products, we originate in various regions, very much focused in Indonesia actually, and Australia in second place. Not that we discriminate other origins, but traditionally it has evolved that way. Some presence in Russia and South Africa. In terms of investments, we have some presence in South Africa coming up. But at the moment, really, the bulk of it is Indonesia and Russia. And then we distribute across, really, in terms of the marketing side, really Southeast Asia, Northeast Asia, South Asia, so which are the strongest markets for us. So now talking about the market in general, the first thing I like to say is this is a snapshot from a slightly outdated Boston Consulting Group study, about 3 weeks old, but it makes the point that I like. If you, the first one is, well, China is in a decline in terms of number of cases, etc. If we can assume that there is no re-emergence of the virus in China, which is not to be taken for granted. So we are all happily making the assumption that we won't have a second Wuhan in China, but just we have to be aware that that's not granted. Now, in terms of the US, Europe, and things that we don't even think about, South America, Eastern and Western Africa. So even if we peak somewhere between June and July, even if we peak at that point, really the decline in terms of infection will not really be significant until at least the end of Q3. So in the absence of a treatment or a vaccine that has been tested in humans and can be distributed broadly to the population, and we're talking billions of people, which it's even by the most optimistic schedules not going to happen anywhere in 2020. Well, the Prime Minister of Singapore actually said it yesterday. He does not expect this virus to go away for the remainder of the year. He actually expects to be in some sort of emergency until the beginning of 2021. So, but in that case, in any case, even if the most optimistic, you still have Q3 bit compromised. So I would at this point say demand recovery, proper demand recovery, maybe some China. India will take time. The Western world will take time. and things are going to. I don't think this really is going to be a quick drop and rally back up. It's going to be a bit more serious than that. We have to be aware of that. Now, in terms of GDP, we already saw what it did to China, the virus in Q1. These numbers could be slightly on the optimistic side, but we think that after a 6.8% drop in GDP in Q1, China might switch into positive territory. I tend to think that it's going to be a struggle. The US will definitely have a horrendous second quarter. GDP growth is, by any estimates, anywhere in between minus 15% and minus 25%, if that's conceivable for anybody. I still would think that Q3 will also be negative. So the opinion of the IMF is that global GDP for this year will be in contraction. So in my opinion, and referring back to that question that we did in the poll, and I want to say one thing at this point. I'm not talking my book, and I'm not trying to sell you a particular view. I'm telling you really the way we are thinking about the market, deep thinking and not counting tons. We're really telling you what is our view of the seriousness of the situation, for one, in terms of health and also in terms of economics. So I think the world will be in contraction this year, in line with IMF, and I think we are actually going into a depression, very likely economically speaking, for good or for bad. I mean, some people will say we are great traders, we can deal with anything. It's not going to be easy for the producers. It's not going to be easy for the end users. So market conditions will remain challenging, I think, for the rest of this year at least. Now, on the oil side, not going into the sensationalist stuff of a particular oil contract for expiry in 48 hours going into negative territory and all of that. If you get too excited for that, you can apply for a job as an anchor in BBC, right? And then try to sell the excitement of the news. But in reality, oil is at $15. WTI is $15. Brent is somewhere in the high 10s, 20. I don't have a screen in front of me, but it's moving all over the place. So the outlook for oil, we've done some exercise ourselves, and I've also done followed, for example, out of many things that we read, energy aspects, what they have been saying this week, and Rita Sen spoke on the BBC a couple of days ago, and she's not talking about rebalancing this year again. So that actually, seeing that she thinks more or less about energy, I'm talking energy, she thinks similar way to the way we are thinking at Noble. It's interesting. I mean, she did her own work. I did my own work. I'm not an oil analyst. I could never be compared to Amrita Sen, but my little S&D of oil actually indicated the same. I calculated on the slide, you can see the shape of the yellow line on the bottom chart, peaks somewhere around August or September even. So that would be the accumulation of inventory. So we would only be really restocking oil, or we will only reach peak inventories at some point in Q3. So again, that kind of confirms that energy markets, and don't think coal is a different thing and very idiosyncratic. Coal is part of a big complex and part of the economy, and ultimately is something that occurs in planet Earth. So it's not going to have its own universe by itself. So it's affected by this. Oil is oversupplied. We believe that rebalancing does not happen in 2020. Opportunities could be great and rewards could be great in 2021 and 2022, but anybody thinking they are going to have it easy and see a quick rally now, it's not quite realistic in our opinion, or I believe. We've seen what the virus does to something like the PMIs. You know, from previous conferences, or if you ever saw me speak, I love talking about PMIs because they are quicker than GDP. They are more forward-looking. They correlate better with electricity. So to me, PMIs are a great indicator of what happens to power. So we saw PMIs in China drop to outrageous levels in February, but quickly recover back in March. China is quite exceptional in that way. We've seen other country GDPs going into contraction, which basically means, obviously, because the economy is in lockdown, it means that people are planning, purchasing managers are planning to buy less goods over the next month than they would normally do for this time of year. So that's what it means. So we are seeing, but basically it indicates economic contraction. So we're getting this signal everywhere, and we have to incorporate that in our S&D, and well, I mean, try to figure out what's the effect of GDP contraction and PMI contraction, industrial production into power, and what that does to coal. So that's all incorporated in the numbers that I'll show you later. There is the good news, I guess. No country has sat on their hands and been passive about this. Most have injected liquidity in the system. In this particular slide, you can see China doing it. Very strong liquidity numbers. Well, total social financing and M2 being the two biggest, I guess. So very good numbers. So the Chinese government wants to facilitate a recovery. The same we saw the Fed do very, I mean, I can almost, at this point, I get excited and I say too much. I think the US stimulating a bit beyond what should be legal to do, trillions of dollars in combination of stimulus and quantitative easing. So anyways, quantitative easing is a bit of a dangerous invention and we have seen an unhealthy expansion of the Fed balance sheet, but that's for a different forum, I guess. It's not, in any case, governments are stimulating, and that's the good news. Okay, so in the short term, money in the system is a good thing, except that the demand has to be there. So people have to come out and consume something, because the commodities have to go somewhere. Energy has to be used. Planes have to fly. Cars have to be driven. Washing machines have to wash, etc. So that kind of thing. So yes, government's trying to help, but the demand dragging its feet. Now, India coming a bit behind everything. So that's the whole issue of the evolution of the curve. We think in India is going to be forced to lift the lockdown, but that basically means the virus will be around for a long time in India. It also, depending on what they reopen, on how people can return to their work, it might actually have limitations that will hamper the economy. So we are not optimistic about India, for example, power consumption in Q3 and industrial production in general. Construction, I personally think construction in many countries will be a challenge. We saw a focus of infection in Singapore in construction sites that led to the shutdown of the lockdown of the country for 7 weeks now being announced already. So yeah, that's an issue. So that's the end of part one of my presentation, trying to, on a short amount of time, tackle the macroeconomic issues.
Great, thank you so much, Rodrigo. So we have now reached the end of part one, and we are about to move on to part two, which is looking at demand. We're now going to do a quick poll, as I said, before each part, just to see how your views compare to Rodrigo's. So please let us know, what do you think about how the demand for seaborne coal will vary over the next 6 months? Will it increase significantly, increase slightly, stay flat, decrease slightly, or decrease significantly? So the question again is, how will seaborne demand for coal vary over the next 6 months? So roughly half of you have voted now. I'll just wait for a few more. Okay, so looking quite bleak there. So 42% of people think that demand will decrease significantly, and 31% say it will decrease slightly. So with that, I will hand over to you, Rodrigo, for part two, looking at demand.
Okay, so basically, I find that, well, everybody has a different school of thought on analytics in energy. To me, once you have made up your mind on what is the macro case that you are tackling, then the second step, logical step, so you have to sit down and think really, what's the virus like? What is it going to do to the economy? That's the difficult part. Once you've decided on that, then comes the more idiosyncratic piece of what is going to be the impact on different countries in terms of power generation, one, and second, the energy mix of for coal itself. Is coal going to be, even if power generation goes down or remains flat, is coal going to be better off than other fuels or so on? So that's what I show in this section, but it really is a follow up of the initial part. To me, it's almost a logical consequence. The first thing is we note that along with the GDP contraction in China, 6.8% drop, we saw a power generation contraction of 7.3%, sorry, which is, expected. It's actually incredibly similar to the GDP number. You would actually wonder how the GDP number is derived, but quite, let's say, makes sense. So we would expect other countries to follow a similar path. The problem here, and I guess the reason the NDRC has paid another visit to our friends in Essex Coal, Fenway, to kind of like put the index on a holiday. I guess the reason, the problem here is that supply has remained incredibly strong, with actually the number for the latest data available, so beginning of April, being higher than any number for this time of year that we have in record. So production is a bit too good in China, and power demand is still lagging. So yeah, the market became oversupplied. We saw it on the inventories, and we saw it on the, you look at many indicators and you choose the ones you prefer. I quite like vessel queues. That's something that always, to me, is very telling. And we saw the vessel queues outside of Wanhua go very low, historically all-time low, I believe. So that meant to me, and I hope Shenhua doesn't give me a color, well, maybe they don't care what I say, but it meant Shenhua was struggling. So yeah, this chart again shows it, demand lagging, lots of output. So for those hoping that supply will react, it didn't quite in China. India, actually very similar pattern with stockpiles ballooning from 30 million tons to 50 million tons throughout the year in a one-way trajectory, mostly derived. I think my son is trying to enter the room. I'll try to keep him out. He's 4. So yeah, exactly. He is now there trying to play with me. No, not the right time. So CIL production, very healthy. Again, this is one of these things that happen in markets. You would expect, the virus to slow down production. But I guess governments really prioritize access to, well, energy and food and certain essential services. So yeah, there was China performed, India performed, Coal India in particular performed well. So we are seeing now a market that is dealing with this tonnage and has to clear it. Japan, Korea, similar patterns. The Korea number for January power generation, we saw a weak number in 2016, but the January 2020 number was actually very low, and this is even before the virus. We don't have a second data point there yet. Japan, we have February, and it minus 4% year to date. Korea probably worse off. I would guess Korea is probably minus 8, minus 9%. This is total. I'm not talking coal. I'm trying to determine the impact in energy consumption, power consumption for these countries. Similar patterns. Actually, we believe Southeast Asia is a bit worse off. Year to date, we saw preliminary numbers for part of Philippines around minus 30% year to date. So yeah, there is this a bit is proof, the same with the PMIs and everything else, that the virus, it tells you the order of magnitude. of the impact of the virus on power generation. So this is, we are talking about numbers like this. China is actually looking like a good case at minus 7.8%. And we could have worse, and we could have in the range of 20% in some countries in Asia. So now, then just to make things a bit more complicated, you have gas in equal basis. So energy adjusted so equivalent to USD per million ton, etc. So adjusting gas and coal to the same basis, what you have is gas pricing ahead of coal in Asia until October. So basically, JKM can be had for a song, and it probably will remain that way for the rest of the summer. So this, if you already have a view that macro is going to be quite complicated, and you see power generation lagging, and then you see gas pricing so aggressively, even the gas that is indexed to Brent, I mean, that would also be on a, I haven't done this, I find it really interesting. It's normally done on a 0.12 of the Brent index. So I was gonna just do it 0.12 of 20. Yeah, it's a 2 point, even the oil index gas price is at $2.4 million BTU. Spot is around that level. I guess there is a reason for the spot to be at that level. It's similar to the pricing of the oil formula. So yeah, you have pressure. So then the next, I guess it all comes together when we say in the Asia Pacific, we expect coal demand to decline this year by 50 million tons from 798 million tons last year. And total global, obviously, because Europe will continue to have, well, lose coal demand, and actually some in the Mediterranean region also that normally doesn't decline. The total global is 72 million tons drop in 998 total. So that is a sizable growth, a sizable drop, about what, 7%? Am I right? Yeah, something around there. So that's actually faring better than oil, with oil losing about 20% at the moment. Oil is down 25%. That was the view of a few of the oil analysis houses. So yeah, I mean, coal at -7. Yeah, it's actually better than other commodities, I guess. But yes, that's the order of magnitude in demand loss that we are talking about this year.
Great, thank you very much for that information about coal demand. So the next part that we're going to look at is all about supply. So please let us know what your views are. So the question is, which coal producing country will see the greatest fall in exports? Indonesia, Australia, Russia, South Africa, or the USA? The question again is, which coal producing country will see the greatest fall in exports? Okay, so let's just share those results. So quite roughly split, 39% saying Indonesia and 31% saying USA, 14% saying South Africa, 11% Australia, and 4% Russia. And with that, I will hand back over to Rodrigo for the next part, which is looking at supply.
Okay, so we derived the number from a rationale coming all the way from macro into demand, and we came up with the 72 million ton number. If we can say that supply will fall by more than 72 million tons this year, then that would be good news. If we conclude that supply at the moment is likely to, or you can also say at current prices, is likely to only cut about 50 million tons, for example, so that you would still have an oversupplied market. So let's take a look at what we think. And remember, when you do supply in any S&D, you are freezing a price, saying what output do you have at current price. So you don't say, okay, if we drop $10 from here, you do that as a sensitivity. But this is not done like that. This is done at current price. So let's say price doesn't move, and then this S&D has to give me a signal in the sense of, okay, so we see it oversupply at current price or undersupply. So then what we like vessel tracking, not to the extent that some of my peers in the industry do, but we like it too. Year to date, we've seen about 14 million ton loss in supply. Indonesia has been going a bit slower. We can see that later. It could be price pressure. It could be some logistic issues. It could be a combination of things. But yeah, yes, we have lost some. If we multiply 14 by 3, how much is that? 42. So let's say we analyze, roughly speaking, let's say this is 14 is for 14 million drop is for, say, 4 months of the year already. And that would say, that would lead you to think, well, supply is being cut at 42 million tons. So we had a 72 drop in demand, and with 42, well, that would lead you to being oversupplied. But that's a preliminary conclusion. Then we really do try to think about each country independently. Indonesia, yes, Indonesia could decline, and I think Indonesia at current price will decline. Will probably lose about, I'm not sure. I mean, but our model, to be fair, things have been moving really quickly. Our model does not have a big decline in Indonesia at the moment. You'll see it at the end, but if anything, I would be increasing the level of drop in supply from Indonesia in the next version of the slides or the model. So yeah, that's where we are so far. About 7.5 million tons drop in supply from Indonesia, probably over the year 25 to 30 or so. So I mean, you'll see the conclusion. The conclusion slide here is a bit different, but we can account for that when we discuss at the end. Australia flat year on year, very classic Australia. Relatively not very sensitive to price, very square in the planning, in the setting of the target, the hitting of the target. So Australia is not really giving us anything to really talk about. It's a flat year on year, not much more to say. Maybe potentially a slight drop for the year. Russia had been going quite slow, and then all of a sudden spiked last week. Don't know. I don't know the exact reason for that. It could be Sakhalin coming back, or it could be the end of the winter. But I don't really see at the moment Russia pulling back out of the out of market in any significant way. So, bit similar to Australia, we'll see. I believe we'll see the availability of Russian being persistent throughout the year. They are. In spite of what people believe, they are very competitive in terms of production cost structure. So I think we'll see Russia stay. South Africa fell behind for a couple of weeks there, but is now bounced back up. This number has a bit of a lag. I do think that South Africa is now relatively able to ship. We've heard over the last few days that there is actually a lag in demand for South African cargo, so maybe we'll see lower shipments in the next few weeks. But I'm not really sure that is because RBCT is closed. It's probably more a lack of nominations, which is the kind of phenomenon that happens at times like this. Colombia, actually, surprisingly, that was a surprise to me, is ahead year on year, even though Cerrejón is relatively closed or due to coronavirus. It has been going quite slow. Colombia is not down year on year, partly because last year there was a lack of nominations in Q1, and this year Colombia managed to place quite a bit of cargoes into the Asian market in Q1. So it was actually a record for Colombia into Asia for the quarter, or for a first quarter in any case. So yeah, so actually Colombia is not behind, surprisingly. So total, I would say, well, the last run we did on this was 27 million tons loss in supply. I would be accommodating, and that minus 8 million tons for Indonesia that you can see there. I don't want to insist on it. That was done assuming prices were a little bit higher than now. To be fair, this is probably a run from 2 weeks ago, and prices have come off significantly. So at this point, I would probably put Indonesia at minus 20, minus 25. That, in any case, still leads you to a minus 50 million tons on supply. So we now go back to Julia and see what else she has in store for us.
Thank you very much, Rodrigo. So the final part of your presentation is looking at a forecast of supply and demand. So we're now going to do another poll. The poll is asking you, when do you think we will see a recovery in prices? Will it be in the next 3 months, or 3 to 6 months, 6 to 12 months, or more than 12 months? So the question again, when will we see a recovery in prices? So roughly half of you have voted. Wait for that to creep up a little bit more. Okay, so almost half of you think 6 to 12 months, and a third to a quarter think more than 12 months or 3 to 6 months. So with that, I will hand over to Rodrigo for the final part of his presentation, giving a forecast in the supply and demand balance.
Okay, I'll keep it short and sweet because I'm sure this is being painful enough for you. So classic slide that I do, and I hope you are used to it by now. Supply and demand last year match at 998 million tons, and I balanced through them into the middle block. So I tried to come up with a likely size of the market for this year. So we have a 927 due to the contraction in demand, which was 72 by 71 approximately. And then there's this block to the right, and I try to show it with my mouse. There's this block here with a 40.8, and that is the gauge of the level of oversupply we measured in the last run of this couple of weeks ago. So with prices slightly lower than that now, probably we still have an overhang of about somewhere in the vicinity of 20 million tons that still has to clear. So that, in analytical terms, would be to say that price is not out of the woods yet, and we might see further price pressure before the market fully rebalances. It could be done, like I said, it could be done by Indonesia pulling tons out of the market. It could be done by demand being actually better than I am inferring here. And by the way, the same way my assumption for Indonesia wasn't that, didn't put a drop big enough on Indonesia. If I was to update this presentation right now, I would be taking down the China and India numbers. So I would also lose a bit more demand than 72 million tons. China is looking quite green in the last few days. So the problem when the market is moving that much, you prepare the presentation and you can never be quick enough. So I would probably have to do it overnight, but it doesn't happen that way. So giving you a live update on the numbers, I would say demand probably instead of minus 72, somewhere minus 90, and supply probably somewhere minus 40, minus 50 catching up. So any case, no matter how you slice it and dice it, still oversupply, still needs to go through a bit more pain in order to really get to the point that the market is healthy again. This is not new to a lot of us. I mean, those of us that have been around since the early 2000s have seen several cycles. We have seen pain. We have seen how the market rebalances. And this is the classic, you wonder, are we at a bottom? You know, is this price level enough to actually take supply out? And we're probably getting there. But I would say now, not yet. We'll get there. We're getting there, but when I say getting there, I mean a few quarters probably, 2 or 3. So a bit more pain to come before we can get all happy. So I think that's most of it. The conclusions, I think I spelled them out enough. So I leave that with you, and I go back to Julia now, who likes me to put the Coaltrans Connect slide always. She likes that.
Okay, so thanks very much for that, Rodrigo. So we're now going to take Q&A. As I said earlier, we would like to prioritize people who are going to actually be able to chat with us. So if you would like to click the raise your hand button, then I can unmute you and you can ask Rodrigo a question directly. I can see that we also have a few questions coming in on the chat, so we can get to those as well. Okay, so Guillaume Perret, I can see you've got your hand up, so I'm going to unmute you now. Hi, Guillaume.
The usual suspects.
Guillaume, okay. So I have tried to unmute you. Perhaps that's your computer. Guillaume?
Can you hear me, Julia?
Yeah, great. We can hear you now.
Sorry. Thanks again, Rodrigo, for the very interesting presentation. Just a quick question. How do you see the latest Chinese power numbers in March? Just for info, we see them slightly better as what we expected.
I mean, it's that China is ahead of the curve in terms of demand recovery. For example, the reason I am negative about China at the moment is really the level of supply. So now you're having a bit of a price struggle on the domestic market in China, where prices were reaching concerning levels, and the government had to do one of the interventions they love, as in suspending the index, which is something we cannot even dream of in the international markets. So yeah, it's I wouldn't say it's a demand problem in China, or to a full extent. It's really, to me, surprisingly, a supply problem.
Okay, Guillaume, I hope that answers your question.
Yeah.
I'm just going to put you back on mute. So we have a few others who would like to ask a question. Hugh Lee, I'm going to unmute your microphone. So Hugh, I believe you now need to unmute it from your computer as well.
Can you hear me? It's Hugh Lee here.
Yes, we can hear you.
Great. Thank you, Rodrigo. Very helpful. How do you see the thermal market, or the coking coal market rather, differing from the thermal market?
No, wow. We are still slightly bearish on metallurgical in the short term. We've been discussing that with Anurag Segal, who is our coking coal and India analyst, who is coming up in the webinar on the 6th of May, I believe. So we remain slightly bearish in the short term. We think that actually the China will come back in the market in Q3. We don't see it clearly in Q2. There are slight oversupply problems in the domestic China metallurgical market, but not to the extent that we see in thermal. Also, steel production in China tends to be stimulated easier and faster than other sectors. So we think, I'm reluctant to say they'll go by the old playbook in which they, first of all, stimulate infrastructure, because they have tried very hard to make it different this time and make it more about consumption. But I do think that the car industry in China has to improve in Q3. I do think the construction sector in China has to improve in Q3. I'm a bit reluctant to say that India will start a recovery in Q3, maybe Q4. That will take a bit longer. So with those two markets recovering, I would be quite happy to say I see the metallurgical coal market rebalancing faster. I would expect it to rebalance a bit ahead of the thermal coal market. I don't think the situation is as dire as it is for thermal coal for a number of reasons. I mean, one is that stimulus target sector that is more favorable for metallurgical. And also, I guess the concentration of supply. You can actually have a level of, I don't want to say control of the market, but it's a supply-demand balance that is easier to rebalance than thermal, where you have too many actors, and it's a very, I don't know, these metallurgical coal is quite oligopolic, and thermal is the opposite of that, whatever that is.
Great. Okay, I hope that answers your question, Hugh. Before we take any more questions by voice, I can see that a few people would like you to go back a few slides, Rodrigo. So they're asking for you to go back to the conclusion slide. I'm not sure if that's the graph or the next slide with the bullet points.
So the waterfall or the
I'm not sure. They've asked for conclusions, so let's leave it on this. And if anyone wants something different, then they can ask. I'm now going to go back to the people who've raised their hands. So the next person, Tapan Sahu, I have unmuted your microphone. So you need to unmute it on your own computer, and then you will be able to speak.
Hello, Mr. Rodrigo.
Hello.
Yeah, wonderful presentation. I want to know how do you see the correlation between the oil and coal market prices right now?
I'm happy to answer, but first we would like to know who you are.
I am Tapan Sahu from India.
Company, please.
Saigal Sea Trade.
Perfect.
With
That's
the
the
vessel
audience. Okay. That's the correlation. That's one of the favorite questions when you consider the macro part of coal. There's a few. Okay, there's a sentiment, a common sentiment, as in both of them being energy commodities. So there's an emotional impact on the market, but there is also a direct impact in terms of gas. So how can I make this quick enough? There is a direct interaction as a substitute. So first of all, you could say fuel oil if fuel oil is cheap enough, you could displace some coal from that. That is a very secondary factor. We've never seen it. We saw fuel oil playing a big role in power generation during Fukushima, for example, in Japan, but that was very exceptional. So it could theoretically displace a little bit of coal or enter the energy mix in an important fashion, but normally it's a very small driver. The second one is through gas prices. So gas prices are either linked to Brent prices. So in that sense, once Brent drops, gas drops, and gas could displace coal because gas is a more direct competitor of coal. And then the other one is that really when you have a glut in energy, the spot gas price, which doesn't have to be correlated necessarily to Brent, tends to drop. So in this particular sense, on the gas side, we've had the whole lot. So what I would say, not necessarily because of oil, but gas itself has been quite oversupplied to the level that is puts pressure on coal. We've seen massive substitution in Europe for various reasons. The long story, and we've also seen a bit of substitution in Asia. So you have that. The other front in which oil has an impact on coal is that a very low oil price will eventually become a low diesel price. Once diesel is cheaper, diesel is a very significant cost component of production in coal. For some producers, somewhere in the vicinity of 30% plus. So yeah, once that component of cost goes lower, and especially when it goes together with the currency, which is, for example, the case of Russia. So you get lower oil prices, and then the ruble depreciates, and then that also affects the local component of well, basically makes it cheaper. Labor, for example, becomes cheaper, so it has another loop there that exacerbates the cycle. So yeah, to the extent that it lowers production costs, it makes producers more competitive and allows, theoretically speaking, coal prices to go lower. Because people don't have to stop producing, they remain profitable. So yeah, none of it is direct. None of it is something you can plug in a Bloomberg terminal as 2 series and find a fantastic correlation. But then at extreme cases, you do find correlations between the two.
Great. I hope that's answered your question. The next person who's raised their hand is Kelvin Kai. So Kelvin, I am now going to unmute you. So you have now been unmuted. I think you'll need to also unmute yourself on your own computer as well. While we wait for Kelvin, Rodrigo, we've had some questions come in. So if you look on the question tab, the most popular question, and please do let me know, Rodrigo, if you feel that you've already, oh, hold on, Kelvin, I can see that you should be available now. Is that right? Kelvin, I can't hear you yet.
I don't know what a question tab is, so I prefer if you read the question.
Okay, so the first question, and let me know if you feel you've already answered this. What's your price forecast till the rest of the year for coal?
For philosophical, ethical, moral, and ecumenical reasons, I refrain myself from putting a number to the forecast. When I say I'm bearish, and I think the market has to clear, obviously the number is lower. In an environment where oil prices go as low as they are now, if that prices into diesel, it will lead us to somewhere similar to where we were in 2016. I'm actually personally, to be fair, I'm surprised we are not at the point that we were in 2016, because in many dimensions, we are much worse off now than we were in 2016. It's probably just a matter of time. So if you, I'm not gonna say a number, but I would say my reference case would be 2016, the lows of March.
Okay.
I gave the number there if you those who understand, right? So
the next question, in your demand slide, 2020 demand for China is almost the same as 2019, despite significant GDP drop in Q1. Could you explain the rationale?
Next presentation I do, you'll see a lower China number. I think that's the rationale. Yeah, a couple of weeks ago that I prepared the slide, I should have updated quickly. Things deteriorated quickly. On my next version, I might have a lower number. China comes when 42 GAR is as cheap as it is now, because I do think that market has relatively, of the many sub-markets that make up the coal market, the 42 GAR Indonesian market is probably quite the one on the most pressure. It might be 5,000, it might be 42 GAR, but those are under a huge amount of pressure when you start seeing prints on the 26 and $25 mark for 42 GAR. China likes that level of price and they buy it. So that would be the reason for Chinese import not to be that bad. They've traditionally been quite opportunistic, even in an oversupplied domestic market. They tried to do it from 2012 all the way to 2015 when the Chinese market was falling. They still bought a lot of low CV. So, you know, that side I think is relatively stable. But yes, with an oversupplied market, there is pressure on various forms in China. One of them being import restrictions, and then things like the traders, Chinese traders not really wanting to speculate on the cargo because the arbitrage not being that attractive, or the other possibility is uncertainty around the yuan, which has been depreciating quite steadily. So it's just more challenging to take the imported cargo. So the answer is, if you are implying that you think China could be a little bit worse than I'm showing, I would agree with you.
Okay, thanks for that. We weren't able to hear from Kelvin, but I can see that he has typed a question for us. So his question: hi Rodrigo, it's very useful information. I'd like to know the average production costs of Indonesia, Australia, and Russia.
Those three I cannot do in my mind, or each of them. Indonesia is a basket. I'm reluctant to give one number because what happens in Indonesia is really dependent upon the CV that you are targeting. So I would say for low CV, we are at cost right now at 26. We are actually quite a lot of producers, about half of the production probably already out of the money in Indonesia. For mid CV, we're right there at around the 40 mark. You also put at least 30 to 40% of production under pressure. and the high CV level, some of it might be okay, but it tends to be on the higher end of production cost in Indonesia. So probably somewhere for 55 now, I don't know, in the high 40s probably, or 50 mark. On Russia, that number is really controversial. Every time I say anything on that, it's I tend to think with the ruble where it is, I would say mid 40s for Russia, and I would say Australia is not much higher from that. So yeah. If you take as an example 2016 cost level where we saw the producers reporting, they were probably in the, Australia was probably in the high 40s. And then people would talk about production inflation, stripping ratios, etc. But I don't think it's that different. I do know that because the pressure was very long at that time, many years of falls in prices, there was a lot of reduction in cost, so we could be a bit higher now. But I would say, yeah, Australia and Russia probably mid to high 40s, and Indonesia, 3 different bands that you have to consider separately.
Great. Okay. We've reached the end of the time for the webinar, but I am going to run over by a few more minutes just so we can take a few more questions. We have someone who has raised their hand, Glennie Sertano. I'm just going to try and unmute you. So you're now unmuted, so please go on your computer and unmute yourself. Glennie.
Hello. Yes.
Hi. Great.
Hi. Hi, Rodrigo.
Hello.
Hello. Hi, Rodrigo. Hello.
Yes,
Hello.
we can hear you.
Yes. Okay. Rodrigo, I'm from Indonesia. I'm working for one of the biggest mining contractor in Indonesia. Thank you for your presentation. It's really interesting. I have a questions. Actually, globally, the coal demand is already been reduced like 30% after this pandemic. But our country, the government is still targeting like 550 million tons a year. And in this first quarter of this year, we are still producing like 165 million tons. And with all your data, very, very thankful for your data. We still have an oversupply here and there, 40 million tons. My question is, do you think this situation can be eased during this year to balance the supply and demand?
When it comes to the Indonesian government as an actor in the market, so when people refer to production quotas and then the numbers ESDM does, and you know, it's a discussion that happens very often in Indonesia. You might or might not know that I lived in Indonesia for
Yes.
some people. So the discussions are, in my opinion, I hope I don't go, I mean, I hope I'm still welcoming Indonesia after I say this. In my opinion, the government tends to lag the market. So the target you're seeing from the Indonesian side, from the Indonesian government side, doesn't really account for market conditions right now. Producers and buyers and traders feel the market condition much quicker than the regulators do in Indonesia. So I mean, I think, and also that I was gonna add, I wanna add another thought that every time that the Indonesian government has tried to rebalance the market, it hasn't been, I think, a successful experience. So in my opinion, right now, what's going to happen is the market will dictate what it needs. There is not much the government can do. The government cannot tell China, you know, you got to buy more coal. Nothing's going to change. India is trying to survive. China is trying to survive. Everybody is doing what they're doing. And the market will dictate what is the necessity, how many tons are needed on the export side. The other factor that you didn't mention, but is implied, is what happens with the domestic market in Indonesia. So we started the year being very optimistic about coal demand within Indonesia, because that will also, the production number you are referring to really is the exports plus the domestic demand. So to the extent that there is an impact on domestic demand as well in Indonesia, we would expect pressure on the total production number. And in the end, I think the production will just be whatever is needed by the combination of the export market and the domestic market. And I don't really see the Indonesian government being the lead in rebalancing the global coal market.
Okay, and with this situation, with this weak demand and this pandemic, do you think it's gonna be the situation will get better within this year, or how do you see that?
The point I was making on the presentation throughout with the balance and everything, it's basically so far with the current level of price we have, we're not rebalancing. So that would indicate that things might get better, but not before they get worse. And I do not personally think that we'll see a proper rebalancing this year, at least before Q3 comes. So yeah, I'm not, and there's a side of me that is actually a little bit more bearish. I hope it doesn't happen, because at that point it actually affects badly. I mean, it goes beyond any exercise that you do. I hope it doesn't spill into 2021.
Okay.
I'm still hoping that we it's a 2020 matter, but I am not very optimistic about 2020 overall. Yeah.
Okay, all right.
Okay,
Clear.
thank you so much.
Thanks. Yes, thank you.
Okay, so we're now going to take another question from the audience. So Virendra Arora, I'm now going to unmute you. So Mr. Arora, I believe you need to unmute yourself on your computer as well. But whenever you're ready, you will be able to speak. While we just wait for you to get ready, we're just going to take another question. So Rodrigo, one very popular question that's come in. If COVID-19 lockdown continues for another 2 to 3 months, how would the impact, oh, hold on 2 seconds. Mr. Arora, are you ready?
Yes, I'm ready.
Perfect. Okay, Mr. Arora. Yes,
yeah.
We can hear you perfectly.
Yes. So can I go ahead?
Yes, please do.
Okay. Welcome, Rodrigo, on the screen once again. Yeah, we met some time ago. The question is that with such low price of oil in the market, I believe a lot of these shale gas producers in USA are going bankrupt, and they will not be able to maintain their production. So if that happens, there's going to be shortage of the raw material for producing power. So what effect it is likely to have on coal? That's my question.
That's one of the most important questions in the world right now, I guess. So things, as you identify, things are very dire for the shale producers in the US. I am an avid equity trader myself for my own personal purposes. And there is an ETF called XOP, which is heavily weighted to small oil producers in the US. The level of that is being decimated. So yes, I would say the market is assuming there could be several defaults and in that sector. Services companies are also struggling. So there will be a very big oil consolidation happening. Amrita Sen from Energy, I keep referring to her because that view is from 2 days ago, which is the freshest I have. But she spoke of that, and she said, yes, we will see things happen, but they will take time. So in terms of a reduction of, for example, gas production in the US, market will probably take some time to rebalance, and it will happen. There will be a shortage of oil probably coming at some point in 2021, probably middle of 2021, before we actually see this really take a toll in terms of production in the United States. So generally speaking, I agree with you. The problem then becomes the timeline of when all of that happens, and it actually has a real impact on the market. So yeah, no disagreement, just a matter of time.
Mr. Arora, does that answer your question? Are you happy?
He has not given me the answer which I wanted. I said, what is the future for coal in that case? Will that be during this time? Do you think coal is going to have a better time? Because the coal got pushed out of the scenario because of the fact that the shale gas was so easily available there. So everybody was trying to push for the shale gas. Now shale gas becoming non-viable. Will that not be a good thing for coal?
Yes, I mean, the first question becomes, when does the oil market rebalance in terms of the supply improves? Then that would lead to a rebalancing of the gas market, and then obviously it will have an effect on global gas prices. And if gas prices improve, then things look better for coal. So I mean, I'm not here to give you the answer you want. I'm here to try to give the answer that I think is fair. So yes, that is a scenario we contemplate, but it's not a scenario. This presentation focuses on a relatively short-term outlook. So we are talking about 2020, and I think the scenario you are describing, to me, it could happen. It's likely to happen, but it's something that I would be talking about in 2022 probably.
Okay,
right.
Thank you very much, Mr. Aurora. Okay, we are now going to take a couple more questions from the audience. So one that's come in that's been very popular. If COVID-19 lockdown continues for another 2 to 3 months, how would this impact the supply and demand of thermal coal between specifically Indonesia and India in Q2?
If the lockdown for COVID-19 continues for 2 or 3 months, the last thing you should be thinking about is the flow between Indonesia, the flow of coal between Indonesia and India. The whole world is going to be a really bad place, because at that point it will suppress the economic activity to a level that central banks will really struggle keeping things afloat. So, by the way, I think the question that you are asking might be more for an impact in terms of Q3, because at that, if we have 2 more months of lockdown, then really it will affect the balance for the cargo that will happen in Q3. So basically, the way I see it, it would make, if the lockdowns continue, it would probably make my demand case here worse. I'm receiving WhatsApp messages here, including Fabio, telling me I'm way too optimistic in some of my numbers. I was trying not to be too pessimistic, actually. People are telling me I'm too optimistic on China, I'm too optimistic on India. So yeah, if things get worse on that front, definitely, but it's not going to be coal. I mean, this is the thing, it's not going to be coal, it's going to be everything. It's going to be everything, right? So we should actually be wondering if we are going to have jobs if we see, say, another quarter of lockdown.
Okay, great. Thank you for that. So the next question from Rodolfo Shimatu. Hi, Rodrigo. Thank you for the presentation. Could you please advise the level of oil that impact gas that can make it cheaper than coal in Japan and South Korea?
Rodolfo, I'll call you. I don't know the answer to that right now. It's a very, that's a numerical question. I feel like I'm doing the SAT again.
Okay. So maybe we will just take one more question. So from AM Durham, what are your views on reduction in shale gas? And is it likely to impact on HHB prices? Will it increase domestic coal consumption in the USA?
I mean, that's very similar to the question we were just debating. People are, again, the rebalancing of the gas, the domestic gas industry in the US. It depends on who you follow. Then you can talk about Goldman Sachs, and our friend Samantha over in Goldman, who has domestic gas in the US. And she's been talking about rebalancing. It could be the winter. It could be the winter this year. and it could be constructive, of course, for the international coal industry. So, but it depends on on temperature, storage. You first have to clear the glut overall in oil and energy in general. So people, I sense that people want somebody to come in and call a bottom or give you a timeline or give you the driver that will rebalance everything. In reality, it's hard to even count the people that are dying every day in the world due to coronavirus at the moment. Countries don't even know how many cases they have. So, I would be delusional if I came in and said, oh, gas market is going to be fine balance in October or so on, because it is not only you are making a lot of assumptions on what's driving the global economy, you are also making assumptions about the dynamics of supply and demand. But those, I mean, without becoming a gas presentation, and there's no time for that, I guess you can have a gas presentation. You should give feedback to Julia. From what I see from the audience, a lot of people want to have a gas session on these webinars. She might be able to add one for you. Not gonna be me the presenter, but
I believe we actually have one lined up. So I've only announced the next 3, but we do have a gas session in the pipeline.
Okay, so most gas analysts would say somewhere in 2021 will be the rebalancing, and all of that scenario unfolds then.
Okay, so we've run over by 15 minutes. I'm sorry to anyone whose questions we aren't able to answer. Any questions that we get, we will give to Rodrigo after this session, and we will try our best to get back to all of you. Rodrigo, can you go to the next slide, please? So I'd just like to wrap up. First and foremost, I'd like to say thank you so much to Rodrigo and the Noble Group team for all of their support with this webinar. As you can see, the next couple of webinars coming up. So the webinars will be running at more or less the same time every Wednesday. So the next one is on China, the one after is on India, and the one after that is on Egypt. So you can use the link www.coaltrans.com/insights for more information about those webinars. The recording of this webinar will be made available, so you will all be emailed the link within a week, and I believe we'll also be sharing the slides as well. Rodrigo, can you go to the next slide, please? So again, just to give you some information about our conferences, as I said earlier, we are planning to run 3 live conferences this autumn: Coaltrans China, World Coal Leaders Network, and Coaltrans Asia. Each of these conferences will be running concurrently with a virtual conference. You'll be able to use the virtual conference to watch seminars, participate in Q&A, round tables, book meeting rooms, many of the features of a normal event. So that's an option for anyone who's unable to attend in person. At the end of this webinar, when you close it, you will be redirected to a very short feedback form. Please do fill in the feedback form, as we'd love to hear from you and find out which topics we should cover next and how often you'd like us to run these. One more time, just to say thank you so much to Rodrigo, and thank you to all of you who have turned up today. Best wishes, and hopefully see you at a Coaltrans event soon. Thank you so much, everyone. Bye.